info in there is not a lot of info in the finance bill. So most of the answers that we have are based on our interpretation of how things will actually pan out. We are waiting for more clarifications that will come out over the course of the next couple of months or so, because most of this gets validated or implemented only post July, August. So we still have a few more months before the actual answers come out. But till then, based on the interpretation of our legal team, I'm just going to share some points and of course try and answer as many questions as I can. But please do take all of these statements with a pinch of salt, and do always go back to your tax accountant and tax authority to discuss the final verdict. This is just a primer. So with that in mind, let's get started. I'll just quickly share my screen, and I hope the screen is visible. Guys, it's visible, right?
Yes, it is.
Okay, perfect. So let's essentially get started. We'll quickly go through 14 of the most important questions that you need to know on crypto taxes in India. So yeah, question on what exactly is the rule? So the rule broadly says is that there is a 30% tax on digital assets. There is a 1% TDS on all transactions, and losses don't offset gains in any other assets. This broadly, like if you wanted to get answer in like 20 seconds, this is the answer. 30% tax on digital assets, 1% TDS, losses don't offset against gains, right? But now let's just quickly jump slightly deeper and take a few more interesting questions. So firstly, what is a digital asset, right? So there is a fairly long description of what the government elaborates as a... Guys, I would recommend please be on mute while people are speaking. Thanks a lot, Ankur. Yeah, so I was saying that there is a fairly large list of or a very long description of what the government means as a virtual digital asset. But to simplify, any crypto token currency that you own today is a digital asset. Any NFT that you own anywhere on any chain is a digital asset. And for that matter, the statement is as general as saying that any asset that acts as a store of value where that value can be exchanged is a digital asset, except for a few things that the government will explicitly specify as not in the future. So that's broadly the definition. So for all practical purposes, everything that we've been doing in the crypto world is a virtual digital asset, which is great. Now we've got a classification of what we've been doing. Let's then talk about what is the 30% tax on. So as per our interpretation, the 30% tax is on net proceeds of going from INR to crypto and back from crypto to INR, or for that matter, going from INR to a digital asset and then back from a digital asset to INR, netted off in a given year. So let's actually take an example of how this will pan out. So let's say you've got 100 rupees that you convert into some crypto. Let's say that crypto you then trade and convert it to some other crypto. You then go out and buy some other NFT. You then exchange that NFT back to some other crypto, and you continue to do all of these things. And by the end of the year, this 100 rupees somehow becomes 1,000 rupees. Now, let's say you convert of that 1,000 rupees, only 300 rupees worth of crypto back into INR in the same financial year. That means that the net profit that you've made is 300 minus 100, it's about 200, and the net tax payable is on that 200 at a 30% rate, which is 60 rupee INR. Now, the of course natural extension to this question is what happens to the remaining 700. No one cares, doesn't matter till you actually convert it to INR. Whenever you convert it to INR in whatever year, you pay tax on the net difference. You don't pay tax till you hold. That's the first kind of sort of broad understanding that we have from the bill, right? Yeah, as a second point, I said over here that net proceeds, right? So the of course question is that how do you define netting? So the first and foremost question is that can losses in crypto be netted against gains in crypto? Mostly yes, but the language is a bit unclear. In a harsher interpretation, you might say that only gains are gains and losses are not, but we are still waiting for further info. But in the spirit of the law, it mostly seems that yes, crypto losses can be netted against crypto gains. As an extension of that, can crypto losses be netted against gains in stocks? No, they can't. Can crypto losses in a given year be carried forward? No, they can't. And this, of course, does happen in the stocks world. And are there any deductions allowed on gains? So ideally, actually, there are no deductions except the cost of acquisition, which means that when you actually bought your crypto, you would have paid a transaction fee. You can net off that cost against your gains. So you actually pay only on the upside if there is any. And that's like a small relief, but nothing else apart from that. So that's kind of like a quick Q&A around the first part, 30% TDS or 30% tax on crypto. Let's talk about the second part that came out, right? What is this 1% TDS? So effectively what the government is doing, that if you do any trade, whether it be crypto to crypto, which means that you convert one digital asset into another, which means that you mint an NFT using ETH, or you convert ETH to Solana, or you go on the Polygon chain and you convert one token to another token, all of that needs to be taxed at the flat 1% rate. And then of course the other question on top of this is who collects this tax. So if you trade, you pay TDS. Essentially, it's your responsibility as a person who's doing the execution to account for this, and at the end of the month net it out. At the end of the year, net it out and pay this TDS. The question is that in what do you pay the TDS? So you pay the TDS in however mode, whichever mode you can. The accounting standard that we expect to get followed is that if, let's say, you converted from ETH to NFT, you paid 0.1 ETH to do that. So a tax on top of that is 0.001 ETH. You account for that ETH as the TDS to be collected in terms of INR at the point of that transaction. That's broadly how TDS is going to be accounted for. Will all exchanges collect TDS from us now? Well, mostly yes. But having said that, we are actually not clear what an exchange is, because the government has not defined which entities are allowed to do these transactions. They've just defined the taxation logic, which is a great step one, but still far away from where we actually want to get to. So will exchanges collect TDS from us now? Mostly yes, but we're not clear on what an exchange is. So we'll hold on till then. If you're doing some transactions, do account for it, keep track of it, and pay TDS on it. This fee structure will kill active trading. That's the obvious answer that comes. And the, of course, response is yes, it will kill active trading unless you're making greater than 1%. And if you're making greater than 0.1, greater than 1% in a trade, it actually doesn't make any sense for you to do a trade. It makes more sense to just hold on to it. And to be honest, the way I would look at it is you need to do, for you to complete an order, it would be 1% in, 1% out. So unless you're making at least 2% in a net transaction, it makes no sense for you to do the trade. It actually just makes more sense to hold. And that is what it is in the current kind of sort of description. You want an airdrop. Yay. Do you pay tax on it? Well, yes, you pay tax on it when you convert into INR. And in that case, you pay tax on the entire amount that you convert to INR. You traded your token on a DEX. Do you pay TDS? Well, yes, you need to kind of sort of account for it and collect it and net it off at the end of the year and pay it to the government. That's at the end of the day your responsibility. You used ETH to buy an NFT. Do you pay TDS? Well, yes, you do pay TDS. The TDS payment is 1% on the cost. When you sell an NFT and convert it back to INR, you of course pay the gains that you made on the entire transaction as 30% on top. So yeah, this was like a rapid fire, about 14, 15 top questions that people ask. Let's just jump into question. And I think the first one that I would want to answer back to is Harshal asking, how do I avoid tax? Harshal, please don't avoid tax. Let's just be honest, good citizens and pay our taxes. Yes.
I think Edul, a lot of people also want to know your take on CBDT, the government launching its own crypto, and how will it impact the existing the ecosystem?
Correct. So I think think of the way at least I think of CBDCs, and in our case, a digital rupee is essentially UPI on steroids, right? Like think of it this way, that UPI just made payments and transactions and moving money from one person to the other so seamless. Now imagine the same level of seamlessness plus transactions are public, and the transaction history is all available to any entity who requests of it from a person. Plus, you can create code on top of it to create special rules of credit, lending, payment, debit, and so on and so forth. Plus, based on this history, you can create rules on future payouts like insurance and so on and so forth. So it's literally will fundamentally rethink how we kind of sort of do transactions. And as a result, like the impact that UPI had on the payments landscape in India, that'll be dwarfed by the impact that something like an INR CDBC can happen or will do. Of course, all of this will take time. And just like how UPI took about 10 years to get to mainstream and be distributed everywhere, there'll be a similar time scale. But I think it is going to change how we transact in this country forever once it comes out.
Cool. Also, like Jitendra wrote, Edul, and I would like to ask this question also, what actually the term transfer means in the budget. So if I'm transferring from, say, Binance to Mudrex, then from Mudrex to CoinDCX, and then CoinDCX to WazirX, and then converting to INR, is it like all these transfers are transfers where I pay 30% tax, or I pay 1% TDS, or
that's actually a very interesting question, because the important part to consider over here in transfers is who holds custody. It is actually not clear that when the transfer happens, you pay tax or the exchange pays tax. Because essentially the exchange is sending the money from one wallet to another and one token from one token to another. That part is unclear because it is unclear who an exchange is and what they do. And we are still waiting for some clarification on that front. Most likely what will happen is that effectively exchange will be authorized as custodians, and any transactions that you do, you will need to bear TDS. So essentially every transfer that you do will essentially mean that you are transferring tokens from one set to another, in which case you might have to end up paying TDS. And in which case actually having a decentralized wallet is then promoted as such.
Great.
Yes.
So that's great, Edul. So people are also interested in knowing what's your opinion on government, considering short-term capital gains and long-term capital gains very similar to equities and mutual fund market in crypto.
So if you look at the history of how equities were taxed, like short-term and long-term capital gains is actually a relatively new invention. And it took time for the government to get to there. And I believe the same thing will happen here. The part that I'm very happy about is that once you say that something is taxable, that means that you're taking steps towards legitimizing it. And those changes in terms of legitimizing are slow and steady questions one by one, because at the government's level, you are making a change and now you're waiting to see how the market is going to evaluate or react to this change and then improve on top of it step by step. So the way at least you need to look at it is that legality and short-term, long-term, and reduction in taxes and removal of TDS and so on and so forth are relatively long-term changes that the government will end up doing to promote the ecosystem and the infrastructure. But whatever we are doing right now is at least a great step one, a great starting point, and that's what I'm very proud of today.
Cool, makes sense. And how do we account for gifts, Edul? Say, suppose I want to gift ETH or an NFT to my girlfriend, and will I pay taxes, have to pay taxes on it?
So there are two parts. One part is just you transferring from yourself to the other person. The other person needs to pay a TDS on it. And of course, when they convert that into INR, they will have to account it as, and assuming that they've not purchased any crypto at their end, when they convert it to INR, they will have to pay a tax on gains, which is at 30%. That's at least the current interpretation.
Cool. So a lot of responsibilities, do you think, coming on the adopters and coming on the people who are investing in the ecosystem?
Correct.
And, we ourselves accounting it and honestly reporting is what government looking forward to.
Correct. So I think, of course, I mean, see, the step one is to first decide how are taxes to be collected, and share the responsibility. Step two is to set up intermediaries who will do the job of collecting taxes and accounting for these things and so on and so forth. Like today, if you work with your stockbroker does some part of the tax collection, but at the end of the day gives you a net summary and says that, okay, this is your net long-term capital gains, this is your net short-term capital gains. You need to pay this much tax on top of it at the end of the year, right? So I'm assuming similar things will happen in this industry as well. We've defined the taxation structure. Now we will end up defining which intermediaries get to do what. And as a result of that, what are you allowed to do and not allowed to do? And then those intermediaries will end up helping individual users in figuring out what is the exact tax amount that they pay. And that's fairly standard.
Cool. So we have an interesting question from Vedant. If I have capital gains tax liability in my crypto portfolio, do I pay an amount after deducting TDS? And if I don't have any capital gains liability, do I get refund of my TDS? So are these TDS, whatever I'm paying on each transaction, deductible from my net gains that I am, showing?
Yeah, Vedant, unfortunately, in the current interpretation of the finance bill, this is not true. Your TDS is separate and the gains that you have is separate. Having said that, this is a question where we have also asked for clarity, and as a result of that, we are waiting for clarity over there. Most likely, this will be the case that your TDS is separate, your gains are separate. They don't net off against each other. Your profits are government's profits. Your losses are your losses.
Cool. So Jitendra came up with an interesting another question that suppose I'm an artist, I'm a graphic designer, and I'm getting paid in crypto. I don't have a cost of acquisition. So am I directly he directly receiving his remuneration in crypto? Is government specifying anything about that? Is it legal to do that, getting remuneration in crypto? And yes, if yes or no, what's the tax implication?
Yes. So think of it this way, that first part is that if you are getting remuneration for a service or a particular good or a particular product that you are selling, that is of course not allowed, because only you can do those transactions in India legally only in currencies. So that was very clear, that if you are offering a service or a good or a product and you are collecting some revenue for it, then you can only do it via currency. But I mean, let's look at another way. Let's say you created some kind of sort of some beautiful poem and send it to someone, and they in return gifted you 1 ETH because they really liked your poem. That ETH gets accounted for exactly how Pranjal's girlfriend would account for her ETH early on in the question, which is that whenever you convert it to INR, you pay tax on that.
Cool. So a lot of people are also interested because since crypto has been global and people trading on global platforms like Binance, and does it comes under the tax ambit? What are the implications? How do they manage and do things? Is it illegal to do transactions with these organizations? Is it legal? Has government specified something on that?
So the government has not specified anything on any organization, which is going back to the earlier point that I was trying to say. There is no clarity on who an exchange is or where you can exchange it from. But the general assumption is if you exchanged it, however you exchanged it, whenever you get it back to INR, please pay tax on it. So right now, what the government has clearly defined is the taxation regime and the tax regime and how it's going to be taxed. The entities that help the government monitor these transactions are not clearly defined yet. So, and as a result of that, the interpretation is that it is not illegal to trade on Binance or Coinbase or OpenSea or CoinDCX or CoinSwitch or Mudrex for that matter. And as long as you pay tax, it's perfectly fine. Having said that, what is a Mudrex or a CoinDCX or a Binance or a CoinSwitch or a World is not clear today.
Cool. Sure, Aman will let you speak just with completing the questions on the chat. So, Edul, last question on the chat. Interesting question, and I would love to hear you also. How would you, define taxes? Since this is just the proposed tax bill, and if you write a letter to government, what will be your broader opinion on how to implement taxes on crypto?
Yes, so of course, and there are different ways in which we would want to look at it, right? So the first part is that I would actually want to seek more clarity. Second part is that I would want to align it with, however, at the end of the day, see, think of it this way, that even today, stocks have a different tax treatment. Assets like cars and houses and so on and so forth have a different tax treatment. Services that you provide have a different tax treatment. Goods that you provide have a different tax treatment. The reality is that crypto is like a stock, like a property, like a good, like a service, like a product. And the unfortunate reality is that the only way to correctly account for a taxation is that you classify the use case and tax on the basis of use case. That can only happen if you are using crypto as a medium of exchange, which we are very clear that the government is not going to do. So what I would want to first and foremost do is first get clarity on the current system and current loopholes, and then step by step look at advancing or broadening this definition on a use case by use case basis and account for taxation on a use case by use case basis, right? Like, for example, long-term, short-term capital gains are there to promote a very particular incentive in the market that the government wants, which is participation in public, in kind of in private companies and private corporations and growth, so that there is growth of that market and industry, right? And that's kind of sort of driven by a global adoption of long-term, short-term capital gains. Maybe once this happens elsewhere, it becomes acceptable in India, right? It's, guys, we all need to understand that we are in like the first decade of a century-long kind of sort of evolution of how people transact and exchange value and information in this new ever-connected world. And in that case, these things will always continue to evolve. And I'm very happy that India is one of those progressive countries that have actually now laid out at least something and taken a step ahead with that, with kind of sort of that description. As time progresses, we will, of course, continue to improve what the classification is, and as a result, improve how much exactly do you get taxed. The good part is this is the worst that can happen. It can only get better from here.
Yeah. That's actually a good sign.
Like think of it this way: 2 years ago, there were bills floating around that would put you in jail for 10 years if you traded crypto, right? We've gone from 10 years of jail to 30% tax in 2 years. Imagine what can happen in the next 2 years.
Cool. Any info on the crypto bill? People really excited. Do you have any insider insights with them talking with Ministry of Finance that when is the crypto bill coming out?
Unfortunately, nothing on that front, folks. And as far as we can see, nothing is listed to come out in the budget session. And as far as we can see, everything that we've spoken about today is also only applicable after July 2022. And anyways, all taxes do need to be filed only in March, latest by March 2023, right? So we're still slightly away from an actual clarification on what the crypto bill will be. But in my opinion, what will happen is that the crypto bill will end up expanding our definition of who can do what and outline entities who are allowed to do some things and not allowed to do other things, and further clarify how the taxation will exactly work.
Cool. So folks, people who have questions about Mudrex, we would love to take that. You can write to me at pranjal@mudrex.com. Our team will love to answer that and connect on that. Sticking to the agenda. What's the tax implication, Edul? If I'm, so there's an interesting question that I would, I was also interested in. That if I transfer my USD Tether from Binance wallet to Mudrex and then invest in a coin set on Mudrex platform, and then it rebalances at the end of the month, what's the tax journey I'm going through? Where do I account and how?
Correct. So as per the current interpretation, there will be a 1% TDS on that rebalancing if the entire coin set gets rebalanced. In light of these new laws, we might actually change how rebalancing works to make the entire transaction more tax efficient.
Great. Looking forward to. So do I pay any taxes while transferring from Binance to Mudrex, my USD Tether?
This was similar to the question Jitendra asked earlier. It seems like most likely Binance will have to pay something like that, and they will deduct it from you. So intrinsically, it might get transferred to the end user. But right now, in the way the definition is set up, it's actually not clear, because when the crypto transfer is happening from, let's say, Binance wallet to Mudrex wallet, actually you are never getting access to crypto, right? It's just like some notional entry in some database. If you're definitely doing on a DEX, this would be important, but this is just some notional entry in a database, in which case there is actually no real blockchain level transaction happening. So in that case, there might not be any TDS that you might have to pay. And actually, this might be a loophole that most exchanges figure out, because when you are trading on an exchange one to the other, the actual custody is always with the exchange and it's never changing, right? In which case, you might never have to pay that TDS, which is why we are waiting for more clarification on what an exchange is, who is the one who pays taxes, and how do we account for such within exchange transactions when custody is not held with uh, with the user themselves. What is clear today is that if custody is held with you, you transfer that custody to someone else, you pay TDS, which means that if you own ETH on a MetaMask wallet and you send that ETH to someone else on a MetaMask wallet, the person who's receiving it pays 1% tax.
Cool. So Aman wants to speak, unmuting.
Sure, Aman.
Sure, unmuting Aman. Hey, Aman, welcome. Yeah.
Hi, am I audible?
Yeah, Aman, you're audible.
Hi, Edul. Thanks for your explanation. Very succinct summary. I have like 3-4 questions. Should I ask them in one go or should I ask them one by one?
Yeah, one by one would be better.
Yeah, okay. So first, like very first question, this TDS tax of 1%, is India the only country that is doing that?
Right now, as far as we know,
Or
yes.
is it? Yeah, so now the thing is,
the clarity is not there. Go ahead.
Okay. So let's say, like, I think this is very difficult to implement, and in one way it is against decentralization, because what do you mean by having different wallets, right? Like, identities and wallets are not the same now. So let's say I buy an NFT for 1 ETH today, which is, let's say, $2,500. That is a transaction as such. I transfer it to myself on another wallet. I own it, but like I don't want to disclose that I am the owner of that wallet, right? So an on-chain activity from one wallet to another. Now, is that a transaction or not? And let's say in 1 hour, I sell it again for $2,700 USDT. So now my net gain for me is $2,000. What am I paying tax on eventually? Is it when I transfer the whole thing to INR and take it back to my bank account? Do I have to keep track of the exact minute at which I sold my NFT? Do I need to keep track of that ETH price? What exactly do I need to keep track of?
So you got it. So
yeah, this is one question.
Great. So let me answer that first. In short, you only pay taxes from INR to crypto and crypto back to INR. So only when the 30% tax is only paid on INR to crypto, crypto to INR. Coming back to the TDS point, you are right. The implementation is, how it gets implemented is still very fuzzy. And all of those questions that you've asked, whether transfer from one custodial wallet to another custodial wallet is me transferring to different entities or to the same entity, is still unclear. And these are some of the questions that we've asked ourselves, and we are seeking clarification on them from the Ministry of Finance. And as I said, it might be slightly too early, because all of this gets implemented in 4-5 months from now. Maybe in the next few months, the government gives us more info on this.
Correct. Now regarding this, there's another question, like what if I'm using a centralized exchange, but if I'm loading the money through P2P, like if I've not connected my UPI account, but I've sent money to someone else and then I get USDT in my exchange, then where is the accountability for this? Like there's no incoming money directly from me.
Correct.
But there might be some outgoing. So what do I do in that?
Which goes back to the original point that I was saying. What is the definition of an exchange? And as a result of that, what is the responsibility of the exchange is not clear, and which is what I expect to come out in the crypto bill. From the current interpretation, it effectively means that if you are on an exchange, you are essentially holding an IOU, right? You're not really holding a crypto. With the definition of virtual digital assets that IOU might still qualify. At least in spirit of the law, it definitely does qualify. So in the spirit of the law, you are supposed to pay taxes on top of that for every single transfer of 1% TDS. But unless there is a clear clarification on this point, one interpretation of this is because you don't have custody, there is no transfer, because there is no transfer actually, and there is just an exchange of IOU, there is no as such TDS to be paid. That's an interpretation. But as I said, we are still waiting for what an exchange is and what a custodian is, and as a result, what taxes do they charge as an implication of this to come out.
Cool. Thanks, Aman. Thanks, Edul. So, Edul, before ending the session, we didn't talk about DeFi. What happens if I'm using, a DeFi exchange, swapping tokens there, and does it work similar to decentralized exchange, or it, works differently? I'm, getting yield from staking. What happens there?
Correct. So, all very important questions. There are some simple answers and then some not so simple answers. In the current definition, let's say you end up giving, let's start from the basic things that you do on DeFi, right? Let's say first thing that you do on DeFi is trade. When you trade, it's a transfer between one person to another, and as a result, you pay TDS on it. If you end up, the second thing that you do is typically end up doing lending, borrowing in some pool. Whenever you do lending, borrowing in some pool, you typically exchange one token for some other tracking token. For example, when you put in USDT on Aave, you get a USDT. In that case, that's a transfer. You ideally should be paying 1% TDS on that. When, let's say, you are staking some amount in some staking pool, at the end of that staking pool, getting back your amount plus the stake, the amount that you got is an additional, essentially as an additional incentive. Whenever you liquidate it back to INR, you pay a tax on that. And all of these are actually fairly concerning points, mostly because of the TDS part, that literally you as the user has the responsibility or has the obligation to track the 1%. And as Aman is saying right now, if that 1% wasn't there, that would be pretty cool. Yes, it is right. I also agree that 1% wasn't there. That would be pretty cool. But I'm assuming the intent is first to understand how are people doing transactions, and then maybe in the future the government does away with that 1% TDS rule, or sets up certain outliers to that, or qualifications that, for example, saying that if you're doing these transfers or transactions on a custodial exchange recognized by the government, you don't need to pay the 1%. So those are, of course, things that might happen, and these might end up acting as deterrents for people to move out into the wild world, apart from the things that are being done by the government.
Thank you, Edul. I think it's mostly all the questions have been answered. So, on an ending note, to everyone here, Edul said a lot of times and people just worried a lot. So guys, this is just a proposed rules and regulation, and we expect a lot of updates and changes. A lot of amendments would happen and surely happen, as a lot of inputs are going from a lot of Indian exchanges, from us also to government recommendation agencies. So don't worry. Take it as a good sign. If you are a crypto enthusiast, as a crypto trade, this is moments of celebration and not being worried. Am I right, Edul?
Correct. At least that is how I am treating it. This is a great step one, but there are, of course, like a mountain to climb, and you climb mountains step by step. So let's just take this battle step by step.
Cool. Thank you everyone for joining in today. I've already shared my email ID. If you are interested in Mudrex, or do you have any question that wasn't answered today, we'll love to answer that. You can write to me, or you can even write to Edul. I'll share Edul's email ID also on the chat box. And do write to us. We will love to talk to you, help you with all your questions regarding today's taxation or in general crypto investment. Thank you everyone for joining.
Rachel, I think we should also tell them about our select calls and the webinars that we are conducting regularly. To answer all your queries, guys, and resolving all your questions, now we have come up with the regular sessions of the webinars that will be conducted every day in the week. And you can just go on our page, Success with Mudrex, and register for them. Also, guys, we are conducting select calls. You are free to come and book your session with us. All your doubts and queries regarding investment in cryptocurrencies, we'll love to answer that.
Great.
Thank you so much,
All right.
guys.
Thanks a lot for all the love, guys. See you.
Thank you,
Bye.
guys.